Hi guys, this is Dilara Daminova and I'm hosting Sam today, answering all the real mortgage related questions to him. Sam, can you please tell me, let's talk about mortgage insurance.
Okay, sure.
Because people are wondering why some people have mortgage insurance and some people don't. Can you please explain when they get it and how they can get rid of mortgage insurance? Because it's an additional payment on their loan.
Okay. So we're going to talk about specific programs. So let's talk about the conventional program. So if you put less than 20% down, you will have mortgage insurance, whether it's paid monthly, paid up front, or whether the lender actually pays it for you. So those are the three main options that you can pay with mortgage insurance. So for instance,
So if you put 20% down payment on conventional loan, you do not get mortgage insurance because that's not enough to get rid of it. Mm-hmm. But if you don't have enough down payment, you will get it. And you actually can get rid of it by paying upfront, right?
Mm-hmm. So you can pay a one-time fee at closing, and then what that allows is you will not have a monthly mortgage insurance payment. And the way I decide, or the way I help the client decide that is, it's based on how long they're going to keep the property for. So if they're going to keep the property for longer term, meaning say like 8, 9, 10 years or more, the upfront option is usually always the better option in that situation, and you'll save money over time. And we're talking about $10,000, $15,000 depending on the sales price and the loan amount.
And how much usually mortgage insurance based on monthly payment? What is the payment of mortgage insurance if people end up having it?
So it's very score driven. So the higher the credit score is, the cheaper the mortgage insurance will be. And it's also dependent on the property type, whether you're purchasing a condo. And again, it's about the risk of the lender. So they look at condos as a little bit more riskier. Mm-hmm. So the mortgage insurance is a little bit more expensive. And it's also dependent on the program. So there's some other programs inside the conventional loan type that we can actually reduce the cost of the mortgage insurance. If, for instance, your income is under $99K, mm-hmm. you actually can go into a program where the mortgage insurance is at a reduced rate, and you also get a benefit of a cheaper interest rate too.
Okay.
And then the other thing we can talk about is FHA. So FHA, if you get an FHA loan, you will have mortgage insurance. If you're putting just the minimum down of 3.5, you'll have mortgage insurance for the life of the loan. So it'll be for 30 years until either you pay it off sooner or if you refinance.
So you can actually, if you got an FHA loan, once you pay off 20%, you can refinance and switch to conventional loan, and that's how mm-hmm. you can get rid of mortgage insurance.
You could do that, or say you have 10% equity, you refinance to a conventional, you can buy out the mortgage insurance mm-hmm. on the day of closing, and then you won't have monthly mortgage insurance, and that's instead of waiting for 20% equity, mm-hmm. you can do it at 10%.
So it's really important to keep in touch with the mortgage officer who actually originated your loan, because they can do all sorts of stuff and help you out with the further monthly payments.
And the other thing is we know the details of the transaction, so we know who you are, we know your job information, we know your loan type, we know all the details, so we can make a decision and recommendation for what's best for you in your specific situation.
Thank you so much, Sam.
Thank you.